Hello everyone and welcome to CSC chapter 1. So in this chapter we are going to discuss about the Canadian security industry. Now it is a very important concept to understand because when you complete the CSC certification you would be part of this industry. So you need to know who are the participants, who are the middlemen, and what are the trends, where is the industry going towards. Okay, so let's start with it. So I will start the highlighter. We'll discuss things that are important, and we'll also elaborate on wherever things are going to be tested in the exam. So these are the learning objectives that this chapter covers. So you need to be able to describe the relationship among the different participants in the securities market. You should be able to distinguish between the three categories of investment dealer. We'll talk about them. Then explain the principal and agency transaction. This is a key topic that is tested in the exam. Agency and principal transaction or agency and principal conflict of interest is very likely to be tested in the exam. Then identify roles and other resources, other financial middlemen, and discuss the current trends that are shaping the industry. So, the Canadian security industry is an industry where there are two sides of the coin and there are middlemen. Okay, so what are the two sides of the coin? On one side of the coin, there is suppliers of capital. So, suppliers of capital are investors. So people who save money, who are able to save money, they are suppliers of capital. It could be an individual. So a person saving money is an individual. A company saving money is an corporate. So anybody, any entity that has surplus cash and wants to use that cash, wants to invest that cash, is a supplier of capital. Then the second side of the coin is user of capital. So people want to use that capital. People want to borrow that money, utilize that money. So it again can be an individual, it can be a company, or it can be a government. So there are suppliers of capital who have excess money. They give that money to users of capital so that they can run a business or they can invest. And who facilitates this transaction? So investment dealers are entities that facilitate this transaction. So this is the structure of Canadian security market. There are savers, there are users of capital, and in between there are middlemen, which are investment dealers that help to connect savers and users. So market facilitates trading and price discovery. So investment dealers or stock markets, they enable trading to happen. That is, you can buy and sell a stock, you can buy and sell a bond. That is happening because financial markets are there to trade. Financial markets enable that trading to happen. Now price discovery, many people have hard time understanding it. When you read the book, it is briefly mentioned. So what is price discovery? So price discovery is, what is the price of one banana? How do you know that? So one banana. How do you know how much is one banana? Is it 10 cents? Is it 20 cents? Is it $1? How do you determine that? So we determine that using market dynamics. So there is supply of bananas and there is demand of bananas. So suppliers are willing to accept certain price and consumers are willing to pay certain price. So the market facilitates price discovery by matching suppliers and supply and demand. So supply and demand is matched and a price is determined for a banana. Now same thing happens for a stock. There are buyers of a stock and there are sellers of a stock. It is because of the financial market that you know what is the price of the stock. If there are a lot of buyers and there are less sellers, then the stocks would go up. If there are a lot of sellers and less buyers, then the stocks would go down. This is the price discovery mechanism. It happens because there is a financial market. Then Canadian Investment Regulatory Organization, or also known as CIRO, is a national self-regulatory organization. So it's national, it's not provincial. So it is pan-Canada. So it also regulates investment advisors in Alberta and Ontario, or like anywhere, BC, etc. And it is a self-regulatory organization. Self-regulatory means it governs its own members. Whoever is a financial advisor and they are registered with CIRO, it only governs them. It does not govern, let's say, police forces. It doesn't govern firemen. It only governs the members. So it is a self-regulatory organization. Members have come together. They have decided that CIRO is going to regulate us, and that's why that's where it gets its powers. Then there are also Provincial Security Commission, which regulate the markets. Now you need to distinguish this for the exam. CIRO regulates advisors. Provincial Security Commissions regulates markets. So it regulates in like the financial market, let's say the stock exchange, or it regulates the companies themselves, etc. But it doesn't regulate the advisors. Then CDS, which is the clearing department, handles clearing and settlement. So it enables people to settle. So whenever you buy a stock, you have to pay. So let's say Apple's or RBC is at $150. So you have to pay $150. So there should be someone to collect that money from you, from the buyer, and the seller needs to give up his stock holding. So there should be someone to collect that stock from the seller. So CDS is the entity that is responsible for collecting money and collecting securities. That is exchanging money for securities. It is responsible for doing that. Then we discuss investment dealers are the middlemen. They help savers transfer their money to users of capital. So investment dealers are retail firms. So retail firms are full service brokers, like the big five bank run brokers are full service brokers. So they also provide research services. They also provide like buy side, sell side research. They also provide customer service, advice, etc. So big five banks are full service brokers, or there are also self-directed brokers. These are called as discount brokers. Example will be some players like Wealthsimple. They do not provide that much advice, right? You can buy or sell a stock on your own. So you are self-directed, right? So those are called as discount brokers. Then on the institutional side, there are institutional firms. So they serve pension and mutual fund players. So so let's say Canadian Pension Authority, or let's say Alberta Pension Authority, they also buy stocks and bonds. So they contact institutional firms to do that. Then there are integrated firms. They operate in retail as well as institutional. Like example will be BlackRock. So it also provides institutional products. It also provides retail products. Underwriting is guaranteeing an issue. Okay. Now this is an important concept in chapter 1. So there is principal and agency transactions. So what does that mean? So usually in investment world, you will have a client. Now that client will hand over the money to an advisor to manage. So an advisor is an agent, and client whose money it is the principal. Now the agent should act in the best interest of the client, but sometimes the agent might act in the best interest of themselves. So that is the principal and agency problem. So clients give their money to an advisor. So clients who have money are the principals. Advisor who manages that money is the agent. The agent should act in the best interest of client, but they don't do that. They act in the best interest of themselves. So that needs to be avoided. So the principles are dealer trades for its own inventory, earns the spread, right? So this is to be avoided. The dealer should deal or trade in the best interest of client, not for itself. Okay. Underwriting new issues is again a principal activity. You're guaranteeing a new issue. We will discuss this in the stock market chapter more. There is a process of IPO in which you underwrite a new issue. So agency is dealer matches buyers and sellers and earns commission. So advisor earns commissions. So they might act in the best interest of themselves in order to earn higher commission rather than working in the best interest of client. Client owns the securities, dealer is the broker. So this is where the agency problem comes in. Now there are different organizations between investment dealers. So this is tested in the exam. You just have to remember it somehow. So within an investment dealer, there is front office. So in front office, you have portfolio management, you have trading, you have sales, and you have marketing. So these functions are classified under the front office of an investment dealer. You just have to remember it somehow. Right? Portfolio management, trading. So stock trading or stock investment, managing portfolio, all front office. Sales, front office. Marketing, front office. Middle office is, right, whether you're doing the correct thing or not. That is compliance, accounting, risk management, legal. This is the way I remember it. Middle office means, are you doing the correct thing or not? So where do you check that? You check it in the compliance department, you check with an accountant, you check with a risk manager, or you check with your lawyers. The back office is the settlement thing where clearing happens, that is exchange of money for stocks, settlement, right, same thing, or record keeping. Who owns the stock, how much do they own, etc. So these are the three functions of an investment dealer, and senior management oversees all of these functions. So clearing and settlement. So CDS is the organization, Clearing and Depository Services, which operates under the name CDSX. As we were discussing, CDS, that is Clearing and Depository Services, which operates under the CDX name, is responsible for clearing and settlement. What is clearing and settlement? Exchanging stocks for money. So they do something called as netting. Netting means it reduces cash and security movement. For example, if you are a client and you have bought 10 shares of Apple, okay, but at the same time, on the same day, you have sold 5 shares of that Apple stock. So you bought 10, but instead of like waiting and taking delivery and holding on it, you sold on the same day 5 Apple stocks. So instead of transferring 10 to you and then taking 5 shares out of your account, they net that transaction and only 5 Apple stocks gets transferred to you. So this is called as netting. So all the positions that you take in the day, at the end of the day, they net that and the net effect gets shown in your account. They do timely settlement, which underpins the market liquidity. Then there are other financial middlemen, right, that operate in the financial market. So there are chartered banks. So this is important for the exam. So there is Schedule 1, Schedule 2 and Schedule 3. Schedule 1 is big Canadian banks. So the big 5. RBC, TD, CIBC, Scotia, BMO, right? So these are big 5 Canadian banks. They are classified in Schedule 1. They're big and they're Canadian. Then Schedule 2 are banks like foreign banks, but they have subsidiaries in Canada. HSBC was an example. HSBC is Hong Kong and Shanghai Bank, but it has a fully owned subsidiary in Canada, right? So that is a Schedule 2 bank. Schedule 3 bank is banks that are foreign in nature, but they have a branch in Canada. They do not have a full-fledged subsidiary, but they have a branch in Canada. Schedule 1 completely Canadian. Schedule 2 foreign, but they have Canadian subsidiaries. Schedule 3 completely foreign, they might have a branch in Canada. Then there are credit unions. So credit unions are smaller entities that again do bank functions. They take deposits and they give out loans. Then there are trust companies. Mutual fund is a trust company. So you collect money from investor, you keep it in a mutual fund trust and manage that money. Then there are loan companies that give out mortgages or give out personal loans, etc. Then there are insurance companies, life insurance companies that collect premiums from insurance policies, and if something happens to the life of the person, they pay out insurance proceeds. Property and casualty companies, they do it for house and auto and other things except life. Then there are investment funds, consumer and sales finance companies, pension funds, etc. So there are a lot of financial middlemen that operate in the financial market. Now, what is the trend? The trend is the fintech companies are coming up. So what is fintech companies? So these are mostly tech companies that do some finance. Okay. An example is two examples. There is Neo Financials, which is a Calgary, Alberta based company that does all the functions of a bank, but it is a tech company. So it doesn't have much presence, but it gives better rates and whatnot. So it's a fintech company. The second company that comes to mind is Wealthsimple, which does investing. So fintech companies are coming up which operate in the banking domain or which operate in the investment domain, and they leverage tech for banking and investment services. So these are just mostly online platforms that challenge traditional institutions. Wealthsimple is a robo-advisor. It means it doesn't have an physical advisor. An AI system, an artificial intelligence system, manages your portfolio. So robo-advisor is a robot, means an AI that is managing your portfolio instead of a physical person. It delivers goal-based portfolios via algorithms and AI. Asset under management under robo-advisors are becoming more and more. They have crossed $1 trillion right in 2024. So this is the trend. Fintech companies is the trend in the financial services world. Also, there is social and economic shifts happening in the market. So there is demographic shift. We have an aging population that is retiring, and millennials are rising. So baby boomers are people who are older, so 60s or 50s, something like that. They are retiring now. And millennials are someone who is in the 30s. They are getting into earning phase, like higher earning phase. So there is shift happening from a defined benefit plan. So defined benefit plan is a type of a pension plan in which pensions were fixed. So older people usually used to have defined benefit plan. So their pensions were fixed wherever they worked, city of Calgary or let's say some university, they had fixed pensions. So those plans are getting out of fashion and defined contribution plans are coming, where the pensions are not fixed, but your employer contributes a certain percentage. So let's say you put 10% in your retirement fund, then the employer also puts 10%. They match your contribution. 10% of salary you put in, they match 10% of your salary in your retirement fund. So this is a defined contribution plan. So those are more favored right now. Savings rate are getting low. So the savings rate in Canada has declined a lot. It's less than 6% right now. It should be more than 10%. Financial planners say more than 10% of your salary you need to save, but we are not doing it as a country. It's less than 6%, and we have very high household debt. It's more than actually 180% right now. It's north of 180%. So if you are earning $100 as a Canadian individual, as a Canadian citizen, we have $180 worth of debt. Debt means it could be a mortgage, it could be car loan, it could be credit card loans, etc. So whatever we earn, on that 180% of that we owe, we are in debt. So advisory, education and credentials are increasingly being valued. So CSC is valued a lot, CFP, CFA, they have a lot of value in the market right now. Then cryptocurrencies are also coming up, so you need to know what they are. So they are classified as digital assets. So Bitcoin, Ether, Solano, right? All of them are cryptocurrencies. So they are pseudo currencies. They are currencies that are not issued by a government, but people still consider them to be currencies. So they are classified under digital assets. So digital assets and blockchain protocols were launched in 2008. Bitcoin started in 2008. Bitcoin was the first cryptocurrency. So they are peer-to-peer ledgers. So it is between two people. There is no central bank or there is no government that is creating that money. It is between two people. So they are peer-to-peer ledgers that record immutable transactions. Bitcoin has a capped supply. So like fiat currency, that is Canadian dollar, there is no like capped supply. Whenever the Bank of Canada wants, they can print more Canadian dollars. But Bitcoin, you cannot print more than 21 million BTC. So it has a fixed supply of 21 million Bitcoins. 19.6 million have already been created. Rest of them will be created slowly. You can invest in them using exchange traded funds. We'll discuss exchange traded funds in level 2, right? Or mutual funds or through future contracts. All of these things we'll discuss in future class. So just to summarize, Canadian markets are extremely developed, deep, liquid and well regulated. Investment dealers, they link capital suppliers and users. We have principal and agency role. Principal is the clients who put their hard-earned money. Agents are advisors who manage that money. Banks and other intermediaries broaden financial services. The new trends are fintech, demographic changes and crypto, which are shaping the industry. That completes chapter 1. See you in chapter 2.